Hello traders, Gary Wagner here. Just about 1:30 in Honolulu, 7:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is August the 7th, 2020, and this is the Daily Report, the Weekend Review. And what a week we have seen. Gold climbing to all-time record highs. Silver basically doubling in the last 4.5 months. It's been exciting. We exited some trades. We are still long certain trades. We'll cover that in detail when we look at the charts. But first, to the price board. Traders, if you recall, yesterday we raised our stops on our long positions in December gold, September silver, and our long Forex position. We also adjusted our ETFs, which we'll speak about during our technical studies. Gold did trade under pressure today, closing down approximately $23 and trading to an intraday low of $20.24. We moved our stop up to $20.35. We entered the trade at $19.97 on Sunday, so we did pull a profit, and we will discuss that in detail when we pull up our charts. Silver closed unchanged on the day. It traded to a low of $27.43. We had moved our stops from $22.90 to $25.99. Effectively, traders in silver are still long going in over the weekend. Now, a lot of this had to do with dollar strength. The dollar once again had a rebound, gaining approximately 0.6% and closing at 93.41. In terms of the ETFs that we have been following, GLD lost about 1.59% and is currently at 190.81. SLV currently at 26.19, and we did cover our nugget. Traders taking that call on the open today would have gotten out at 106.81. So traders, we were stopped out of our trade and stopped out with a decent profit today. We entered our long trade at 19.97. We exited the trade at 2,035, giving us a profit of $38 per ounce, which is $3,800 per COMEX contract, or approximately a 32% return. Now that we are flat over the weekend, the question becomes, is today's action a one-off, or is it the sign for more selling pressure possibly next week? The first thing that is extremely noteworthy is a pattern that we've identified, a simple two-day pattern called an engulfing bearish. It is when the real body of the red candle completely engulfs the former green candle, as you see right here. However, there are two really important components that need to accompany this pattern to take it as a valid and strong signal. First, the pattern has to occur after a defined uptrend. We certainly can say that we've met that. The second component that is critical to having the signal be a valid signal is a confirming candle. For an engulfing bearish, which is a key bearish reversal signal, you need to see that the following trading day is a red candle with a lower low and a lower high. The longer the body length, the better, and the deeper it goes into retracement areas, the better. Now, if that is the case, where could we see gold pricing going? As you can see, the market traded lower, but it did not break 2012. That is the 23% retracement of a shorter data set. We are simply beginning from July, after the market had traded sideways for a while and really began to take off. If we see an effective close below $2,012, we could see the market go as low as 1965, 1966, and that is the 38.2% retracement level. So we have pulled profits. We are going into the weekend flat, and let's see how the market opens next week, whether or not this could be a one and done, which I put at about a 30% probability, or the beginning of some type of correction, which I believe is more probable than a one and done. Traders that have used Forex as their instrument rather than the COMEX contract also pulled profits on the trade. The numbers are a little bit different, but the pattern that we identify is the very same pattern that we saw in gold futures, and that is an engulfing bearish. We would want to see confirmation, a red candle with a lower low, lower high, and the longer the body, the more strong this signal is that we could see the market go lower. If that is the case, the 23.6% retracement would be the first area we'd look at. That's at $2,003. The second level is the 38.2% retracement. That is at $1,959. We will go in flat on all gold positions in Forex and futures and see how the market develops on Monday. In terms of our trading recommendation for silver, we are still active with a long position that we entered on Sunday, and we entered that at $24.40. That is this green line right here. The red line is where we moved our stop to, which is $25.99. The market effectively never came close to that stop. However, I do have a cautionary tale in terms of what we could see. The pattern that we're looking at in silver is a little bit different than the engulfing bearish. This is simply known as a dark cloud cover. It occurs after a defined uptrend when a red candle opens above the prior green candle and closes at or below the midpoint. We can certainly say that we met that criteria. It closed well below the midpoint. It also requires a confirming candle. We are looking at GLD. We entered this position back on June 29th when we spoke about rebalancing our overall portfolio. We entered the trade at 166.17 per share. Yesterday, we moved our stop to 187. You can see that the low that came in today was 189.33. The only caution that I am looking for in terms of where this market might go next week is that you have a variation off of a tri-star top. That is the candlestick pattern, but we have a tight stop, and that would push us out with really good profits per share. We are looking at a daily chart of the iShares Silver Trust. We entered this particular trade a little bit later than the GLD and NUGT or Nugget. However, we did get in at 18. Yesterday, we moved our stop to 23.80, locking in that differential per share. Expect it to act in accordance to what we see silver futures do. When we sent out our trade alert to raise stops on all of our trades, one of them was an exception, NUGT, in which we suggested that you go and sell that on the open of today's market. The market opened today at 106.81, giving traders taking that call a profit of just over $33 per share. This has been a most interesting week, and I can't wait to see what occurs next week. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for the next daily update and review. Bye-bye.